I think that in the years ahead, I think gold is going to double, maybe triple. But I don't know if that's going to be in 5 years, 7 years, 10 years. I just think that that will happen. If you understand that fiat currencies get debased over time, if you understand that the whole world has debt problems, if you understand that it's not just a U.S. thing, and the way that the world will deal with this with these debt crises is to inject more money into the system. Over time, gold goes higher.
In a recent discussion about the future of the gold market, Brent Johnson, the CEO of Santiago Capital wealth management firm, emphasized a long-term perspective, rejecting the idea of basing gold ownership solely on short-term predictions. Gold prices experienced a moderate decline during midday U.S. trading on Thursday, attributed to a routine corrective pullback, following substantial gains that had propelled the yellow metal to a 6-month high on Wednesday. Despite this, the gold price rebounded on Friday, maintaining modest intraday gains in the early European session. Notably, the $20-50 level remains a significant resistance barrier, as observed in past instances. Johnson encourages investors to view pullbacks in the gold market as buying opportunities, underscoring gold's resilience and long-term value. This sentiment aligns with his commitment to gold for its potential over the next 5, 10, or 15 years. As of the end of November, the price of gold had seen a year-to-date increase of more than 10%. This uptrend is attributed to market participants anticipating the potential conclusion of the current tightening cycle. While Johnson foresees the potential for gold's value to double or even triple in the years ahead, he refrains from providing a specific time frame, acknowledging the uncertainty in predicting market movements accurately. Analysts share a bullish outlook on gold, anticipating the possibility of gold rates reaching $2,400 per ounce in 2024. This optimistic projection is based on a multifaceted interplay of economic, geopolitical, and market factors. The market's response to gold's recent correction underscores the ongoing interest and resilience of the precious metal, reinforcing its position as a valuable asset for investors with a long-term perspective. Before diving into Brent Johnson's insightful interview, subscribe to our channel and give this video a big thumbs up.
I've always said that I think gold should be the cornerstone of every portfolio. Now, I'm not somebody who thinks that you should only own gold and not own anything else. I'm very much believe in diversification. I very much believe you should have a diversified basket of assets. That includes fixed income, it includes equities, it includes real estate. But I think gold is a crucial part of that. And I try not to, I know you're going to want me to give a prediction here, and I'm happy to do it, but I really don't own gold because I think it's going to 2,200 next year, and to be honest, I own gold and I don't care if it goes back to 1,700 or 1,600. I don't own gold for what it will do over the next year. I own gold for what it will do over the next 5 to 10, 15 years. Yeah. And to me, it's kind of insurance against political idiocy, for lack of a better way of saying it, right? And I think that any pullbacks in gold need to be bought. Okay, so if we're at 2,000 now, we've been here several times and we've pulled back. If we get a pullback to 1,900, 1,850, I think you have to buy it. If you don't already own gold, yeah, I think you have to buy that. And if you're looking to add, I think you have to buy on that pullback. If you don't own any at all, then I think you need to start buying some. Maybe you don't go out and buy it all right now because we're back at it's pretty close to its all-time high. But I think that in the years ahead, I think gold is going to double, maybe triple. I don't know if that's going to be in 5 years, 7 years, 10 years. I just think that that will happen. I do not think it's going to happen next year. I don't think that gold's going to $3,000 in 2024. Now, if it does, I'll be okay with it because I own gold, right? And not going to be the worst thing in the world to say I don't think gold's going to 3,000 and then have it go to 3,000 and you made a bunch of money anyway. So if I can make money being wrong, I'm happy to do that all day. I think if you understand that fiat currencies get debased over time, if you understand that the whole world has debt problems, it's not just a U.S. thing, and the way that the world will deal with these debt crises is to inject more money into the system. Over time, gold goes higher. The flip side, and the part of the reason I say you don't just go out and put all your money into it right now, is because I still believe that the biggest threat to the global economy is a spiking US dollar for many of the reasons that we've discussed before. And typically when you get a spiking dollar, you get liquidating type markets. That doesn't just affect gold, it affects everything. It affects copper, wheat, oil, gold, equities, real estate. And so I think investors need to be prepared for assets to go up and to the right over time because fiat gets debased, but be prepared for these, terrifying drawdowns along the way. And that means having some cash or some kind of liquidity on the sideline so that you can be a distressed buyer rather than being a distressed seller.
Amidst a 20% growth in the stock market since the beginning of 2023, the gold price forecast remains optimistic, with expectations of stable long-term growth. The historical high of $2,073 in May 2023 underscores the resilience of gold. Despite rising real rates throughout most of the year, Johnson observes that gold showcased notable resilience, especially up until September. This suggests a nuanced relationship between gold and prevailing economic factors. The World Gold Council reports a robust gold demand in Q3, exceeding its 5-year average by 8%. Notably, net central bank buying reached 337 tons, marking the third strongest quarter in the data series, although falling short of the exceptional 459 tons recorded in Q3 of 2022. Johnson highlights that despite the strength of the US dollar, global currency weakness has been a significant driver of international gold demand. This demand is not solely due to concerns about the dollar, but also from perceived instability in other global currencies. In September 2023, the average monthly gold price globally reached $1,915.95 per troy ounce. Johnson notes in September, a surge in real rates led to a brief gold sell-off as investors confronted the unexpected possibility of interest rates not declining as anticipated. Let's get back to the interview.
For most of the year, despite real rates continuing to rise, gold held up very well through September. And I think that was partly because there was an expectation that real rates were going to fall because interest rates were going to fall. But then I also think it's partly due to the fact that as we go forward in time, I just think there's a growing awareness that this whole fiat game, debt-based monetary system is in trouble. And not just the United States, the whole world. Even though the dollar's been strong over the last couple of years, the rest of the world's currencies have been really weak. And so there's been great demand from the rest of the world for gold, not because of the dollar, but because of their own currencies are horrible currencies. So I think a combination of international demand, expectations for interest rates to come down, and then, just all fiat in general getting debased. Even because, again, we've talked about this many times, the DXY index, the dollar index can rise while it's also getting debased at the same time. Because the DXY is a relative measure, right? And so I think it's kind of a combination of all those. And I think that kind of was proven in September because in September, real rates rose again, or they rose a lot, and that's when gold took a hit, because I think the markets kind of had a short-term come to Jesus moment that, oh my gosh, interest rates might not be falling, they might actually be going higher. That means real rates are higher, so then gold sold off. But then as soon as Powell came out and was dovish again, or the market interpreted it as dovish, real rates fell, and gold, made up all that ground that it lost extremely quickly. And so now we're back, equities are at their highs of the year, gold's at its high of the year, the miners are at the high of the year. I think the miners are at their high of the year. I think gold's up 10% for the year. But I think the miners are at 5%, so I don't think they're up as much as gold. Maybe I'm wrong on that.
They're definitely less.
But if you look at across the board, equities, gold, miners, silver, oil, a month ago, they were either up a little bit, with the exception of the Magnificent Seven equities. The Dow was basically up 1 or 2% for the year. The Russell 2000 was down for the year. The S&P was up a few percent for the year. Gold was flat for the year. The miners, I think, were down 10% for the year. But just in literally 30 days, everything has rocketed back higher. And so my personal opinion is that everything has moved in the right direction, but it's also my opinion that everything has gotten way ahead of itself. So it's not that I disagree with the move or the direction of the move, but I think the magnitude of the move across all of these different asset classes has gotten a little bit ahead of itself, because while I don't think that there probably will be any more rate hikes, I'm not so sure we're going to get these Fed cuts as soon as the market seems to think that we're going to. unless we have some kind of a crisis or a liquidity event. If we have some kind of a crisis or a liquidity event, then we will absolutely get cuts or QE or some kind of a bailout or whatever it is. But assuming that we don't, and if that's happening, then I would think that these prices would be lower as a result of the crisis. So I kind of feel like, I don't want to come out and say I'm bearish on everything, because I don't know that we're going to have this giant crash. I just don't think that we're going to continue to rocket up at the pace we have for the last 30 days for the next 3 months. I think that's pretty unlikely.
Coin price forecast experts' gold rate prediction for 2023 is around $2,030. The upward trend will continue in 2024. How will evolving market dynamics and global economic factors shape the trajectory of gold prices in the coming year? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.